Welcome everyone to this episode of the Ask Jason Gelios Show. I'm Jason Gelios, Michigan Realtor, and I'm very excited because in this episode I brought my good friend and mortgage expert in Southeast Michigan, Heba Hakim from Caliber Home Loans, and she's going to be talking about what credit scores lenders look for in terms of obtaining a specific loan type. So Heba, how are you?
Good, how are you?
Good, so glad you're here.
Thank you for having me.
So this is a common question that I get asked, and I'm like, well, I figure why not bring you in, the mortgage expert, and have you dive into what scores lenders look for.
Okay.
And obviously it's case by case depending on what, other things. But this will at least give people an idea of what lenders typically look for.
Okay.
So I'll let you go ahead and take the realm.
Okay, wonderful. So typically we're looking at credit scores that are good. What is good?
Right.
So it depends on the program. So people say, oh, I need 700 credit scores. I need 800 credit scores to buy a house. Not always. So there are programs that will allow people to buy their home with lower credit scores or mediocre credit scores. And it depends on the program.
Right.
So FHA's guideline says 580 credit score. However, it's also going to read the credit report, not just the score.
Right.
And if it likes the credit report, then it will give us an approval.
Right, because there's a lot of times, especially when I speak with home buyers, before I even send them your way, they're like, well, I probably won't get qualified, or,
Right.
Or on the flip side, they have no idea where their score is at. They haven't even had their score pulled.
Right.
So it's definitely helpful for them to kind of be guided in that direction and know that it's not just about the score, like you said.
Correct.
It's about how their report shows, and if they don't have anything on their actual report.
Correct. So it depends on the credit report, of course, and the scores, and then the history of what it shows. So we want good, positive things reporting on the credit report. So even though the person's credit score could be lower at one point, but it might have been even lower before, and now she's improved her credit report by paying things off, collections, maybe things like that, judgments, and now it's only on the way of improving. And so if it's improving and the scores haven't reflected to be even higher, but the report shows it's been cleaned up, then it's possible we can get an approval.
Which makes sense.
And then, and then there's different programs. MSHDA requires a credit score of 640. So it depends on the credit report, and again, it reads the credit reporting. Different programs, different requirements.
Right.
Conventional is at 620. However, it reads the credit report again, and then it's gotten smart, not just by reading scores.
Right.
So it looks at everything in the whole picture, not how much they're putting down, how much assets they have, how much reserves they have. It looks at how long they've been at their job. Everything's being looked at for an approval, but the score is a big factor. And the better, the higher chance of getting approval.
It sounds like, though, that credit score in general is not 100% the actual deciding factor.
It's not.
And I believe, too, that at least I've talked with several homebuyers about how they're not aware that they have more than one score. They feel that you just pull one score and then that's it.
Correct.
Can you talk a little bit about how how a lender would calculate all three scores to get
the one that we use?
The one that counts, I guess.
Okay. So everybody has 3 credit scores: Experian, Equifax, and TransUnion. There's 3. So when we do mortgages, it's always the middle score. So we don't take the average of all 3 of them. We take the middle score. So let's say one of them is 700, and then we have 710, and then we have 720. We'll take the 710, and that's what we use to determine the pricing, and that's what is being read on the credit report.
Oh, nice. See, not many people think about that. They say,
Yes.
oh, I had my credit pulled, and it was, I don't know, 580, right? And it's like, yeah, but you have other scores that they haven't, or like they go through these credit monitoring services, which I'm not a huge fan of those. I want to go back to a loan type that you mentioned in terms of, it was MSHDA. Can you explain a little bit about what that is?
So MSHDA is a program from the state of Michigan, It allows you to buy a house with assistance. Either you can do down payment assistance of up to $10,000, depending on the area, or $7,500 depending on the area what you qualify for. So that gives you money to purchase your first home. It is a lien against the property, but you're not making any payments on that money that you're borrowing to get into your home. Okay.
It's a good program.
It is a nice program. That one requires credit scores of 640. And what's nice about it is you don't have to pay it back in a certain time frame until you either sell the home or refinance the home. So it is there as a lien, but you don't have to worry about it. You're not making any payments, and you don't have to pay it back until either you refinance and you have built up equity, or until you sell the home, and that comes out of your proceeds.
So basically gets them in the home.
Yep, you don't have to wait until you save $10,000.
Yeah, which is hard
That's
for
nice.
a lot of people, probably most people.
Yes. And if you do have your own down payment to put down, Mich does also a nice program. It gives you a lower interest rate if you're not using their money.
Oh, nice, nice.
So that's another rate. It's a beautiful rate compared to what conventional is doing right now.
Yes, the rates have definitely gone up.
Yes.
Well, what about other types of government loans? And if you already mentioned this, I'm sorry, but
okay.
VA.
So we do offer VA. We do offer USDA.
Okay.
We offer FHA. We offer MISHDA. So we offer a lot of programs that help people out with different programs that fit their needs.
Nice. Mm-hmm. And obviously it makes sense. I mean, I stress this with every home buyer I meet. Or even speak with over the phone generally. It's, hey, listen, because they will ask me, the agent, hey, how much would this cost? How much? And I'm like, sit down, speak with a reputable lender like Heba if you're in Southeast Michigan, but speak with a reputable lender who will actually share with you this information and kind of figure out where you fit best, and then see if it works for you. It's just, I can't stress it enough, because a lot of buyers, they'll be looking at a house, or they'll drive by, they'll see my sign or something, and they'll be like, oh, I want to see this house. It's like, well, okay, have you spoken with a lender yet?
Yes.
Have you actually, and I know this is kind of a little bit of a side rant, but those who watch the show know that I do side rants.
Love them. I watch them all the time.
Yeah, thanks. But you want to just speak with a lender, because, too, you never want to make assumptions about what your credit score is, or, oh, yeah, actually, I do want to bring up something, too. A credit score pulled by a lender, correct me if I'm wrong, but it's going to be different than if a consumer pulls it on their own.
Absolutely.
Yeah, can you dive in a little bit about that?
So there's different credit reports, and there's different credit reporting agencies. So you might go get a car loan, and they might pull an Experian one single credit report, and that score might be different from when we pull it, even though they're both Experian.
Right.
One of them's looking at just how you pay your installment loans, and it gives you a different score. One of them could be looking at like how you pay your overall of everything. And so we look at everything that's on your credit report, any judgments, bankruptcies, collections, how you pay 30 days late, if you're current on everything. We look at everything when it comes to mortgages, and so that report is a little bit different.
Well, of course, because they're ultimately asking for probably the most amount of money that they will ever ask any type of lender.
Correct.
Although some of these cars are pretty expensive.
I know.
$100,000 for a car. It's a small house, but no, it absolutely makes sense. So, is there anything else you'd like to share, maybe about you? You are with Caliber Home Loans, which I know is, and this might sound like a sales pitch, but it is true. They're pretty solid lender, and so this information is pretty reliable. So maybe share a little bit about what you do, how you are different, and then we'll conclude the show.
So I've been doing mortgages for 29 years. I love working at Caliber, and here's why. I have a whole ton of lists of products that we offer, and the best part is that we keep our servicing here. It's not like
It's huge.
a broker or any other lender that sells their servicing. We are servicing our own loans, and they might be serviced through NewRez, which is the same company as us. It's not a different company. We're all, it's under our umbrella.
Which is a lot better.
Yes, which is it stays with us. You don't have to worry about being sold from one institution to another throughout the years. It's kept with us, which is nice.
And that does happen a lot with many lenders. Is they take care of you, they bring you in. Now, obviously, you can always contact your loan officer, right? But that's a huge perk, and that's what a lot of people have asked me. Buyers ask me is, are they gonna close it and then sell it and sell it and sell it? So that's a huge perk in itself.
Right.
So I really appreciate you sharing your information.
Sure.
Hope you guys found it valuable. If you didn't, go back, rewatch it. Otherwise, I'm Jason Gelios, Michigan Realtor, and this is Heba Hakim, Southeast Michigan mortgage expert. I highly encourage you to reach out if you're looking to purchase real estate. So otherwise, I appreciate you guys watching. Thank you.
Thank you.